Heavyweights like Apple, Microsoft, and Nvidia are down by 10 to 15%. The nasdaq has crashed by over 6%, and the Nikkei has plunged more than 12%.
European and Asian markets plummeting around the world, and we've been looking at futures, and they were more than 1,000 points down.
Traders may want to put on their hard hats. That's because U.S. markets picked up where Japan left off, and the global stock market intensifies.
Japan's Nikkei index fell 12%. It's the single worst decline since the 1987 crash on Black Monday.
Welcome to our special report on the dramatic stock market crash of August 4th, 2024. What happened? Why did the markets collapse? What information was kept from us? And how can we benefit from this situation? Stay tuned to learn all the important details. Let's start with a mysterious, unofficial meeting that took place sometime before the crash. Janet Yellen, the U.S. Secretary of the Treasury, met with high-ranking officials from China and Japan to discuss stabilizing the global currency markets. But what exactly was discussed? And could this meeting have triggered the crash? Several factors have been cited as causes of the crash. One of the main reasons appears to be geopolitical tensions, particularly the ongoing conflict in the Middle East. The uncertainties in this crucial oil-producing region led to significant fluctuations in oil prices and triggered panic selling. Another critical factor was the collapse of technology stocks, especially in the AI sector. Nvidia, the leading manufacturer of graphics processors, reported design flaws in their new Blackwell series, which caused production delays and a massive drop in their stock price. The Nikkei index fell by 12.4%, the largest drop since 1987. What caused this dramatic decline? A sharp rise in the yen severely impacted Japan's export-dependent companies. The yen surged by 14% in less than a month, making exports more expensive and dragging down stock prices. But it gets worse. The sudden rise in the yen triggered automated selling, similar to margin calls. Investors who financed in yen and invested in other currencies had to quickly liquidate their positions to cover losses, leading to a massive sell-off of Japanese stocks. And this is where Janet Yellen's meeting comes into play. The goal of the meeting was to ensure currency stability and create a balance. However, the measures taken had unexpected side effects, which contributed to the stock market crash. The efforts by Yellen and the finance ministers from China and Japan to stabilize the currencies had unintended consequences. The rapid rise of the yen led to a chain reaction in the markets, as many automated trading strategies and algorithmic systems responded to the increase by selling large amounts of stock. Despite the recent stock market crash, you should not be discouraged, as the best opportunities often arise during times of crisis. High-quality technology stocks like Nvidia, Qualcomm, AMD, as well as tech giants like Google, Meta, and Microsoft remain promising in the long term. This is because the future in the AI sector looks exceptionally strong. It's not just the big names that hold potential. Suppliers and specialists like Supermicrocomputer, Arista Networks, and Pure Storage, who operate in the fields of AI chips and data centers, are also set to benefit massively from the growing demand for AI technology. Such crashes are rare, but when they do occur, they offer an excellent opportunity to acquire quality stocks at lower prices. Those who invest for the long term can significantly benefit from this market correction. Did you buy stocks in the crash? Write to us in the comments. So take advantage of the opportunity and stay informed. Thank you for watching, and be sure to subscribe to our channel for more exciting insights into the world of financial markets.